Hey, what's up everyone? This is Dave Kausagan with Dave's Your Guy Real Estate, and today we're going to talk about the 5 steps to a successful home purchase. So I'm going to give you all 5 steps and then I'll break them down for you individually. Step 1, get approved for a home loan by a reputable and direct lender. Step 2, understand all of your out-of-pocket costs. Step 3, build a strategic and realistic home search based on your budget. Step 4, build a strategic off-market search. And last but not least, step 5, review the purchase contract and understand it before you start writing offers. All right, so getting into the first one, getting approved by a reputable direct lender. Now, why is that important? Well, a direct lender versus a mortgage broker is one who is going to ultimately sell your loan directly to Fannie Mae and Freddie Mac, which I can get into a whole rabbit hole of the secondary mortgage market, but I'm not going to do that here.
Boring.
Bottom line is the direct lender can get the job done typically faster than a mortgage broker. A mortgage broker is ultimately going to go through one of these direct lenders, so you might as well just go through a direct lender to begin with. The other thing that's important about getting a reputable lender is really the loan officer. It's not so much even just the company. Now, some people will come to me and want to go to a big bank like a big brick and mortar bank and get a mortgage through the people that they bank with. And that can be good and that can be bad. It all depends on the quality of the loan officer and the team surrounding that loan officer to get the job done in a timely manner. The biggest problem that you have is that the lender is not tied to your purchase contract, so they don't have to abide by the timelines of the contract. They're not liable for anything. You are. So it's important that you have a lender that really is very good at managing timelines appropriately and getting the job done in a timely fashion. And that's not just the loan officer, but that's the entire team of that loan officer. There's an underwriter, there's a loan processor, and so it's really important that the entire team be quality. That's why I've worked with a number of really good lenders, so I'm always a good resource for reputable lenders. But getting a good referral from somebody is important. Now, every deal is different, so just know that if you are, let's say, a W-2 employee that makes $300,000 a year, well, it's much easier to verify income with you. Unfortunately, the self-employed, 1099 independent contractor type employment is not always the easiest to underwrite for a lender. So although maybe your friend had a great experience with a certain loan officer because it was a really easy file, your file could be more difficult. So it's not always one size fits all. So just know that going into it, but it is important to get a good referral and understand who you're working with before you choose a lender.
Aren't you supposed to be a predatory lender? Then prey on me.
I would say another important factor is just your gut feel when you meet a lender and see if they're a right fit for you. Are they educating you on the process? Are they being pushy, or are they really teaching you and then letting you make your own decisions? I like to work with people who come from a heart of a teacher rather than a salesy person. But at the end of the day, you want someone who's gonna get the job done. Another reason why it's such a good idea to get pre-approved versus pre-qualified. Pre-approved usually means that the lender's underwriter has already reviewed all of your documents and verified them. Whereas a pre-qualification is typically where you've given information about your financial situation, they've based their qualification on what you've given them verbally, or perhaps you've given them a few documents, but they haven't verified anything. So the last thing you want to do is get into escrow on a property that you love and have to have, and then have a lender issue pop up, or not so much the lender issue, but it is just something in your file that that lender can't deal with in a timely manner, and you end up having to back out of the transaction, or in a worst case scenario, you end up losing your deposit or something like that, where actually financially it hurts you.
I think he lost all his money, didn't he?
That's never a good situation. So getting fully underwritten upfront, pre-approved upfront, is the ideal way to go, in my opinion. Well, hey, and if you've been one of the rare few that have been stacking your cash like a madman and don't need a loan, then just disregard all that lender stuff. All right, so understanding your out-of-pocket costs. So once you've talked to your lender, they're going to give you a rundown of all of the costs that you're gonna have to incur, your closing costs, your appraisal costs, your credit report. There's gonna be a lot of little fees that go into your closing costs. And they're also gonna break down, not just your down payment, but all of the fees associated with closing the transaction. So I know a lot of people think, oh, well, if I put 20% down, that's it. No, you gotta pay your lender, you gotta have, usually you'll have what's called an impound account, which we can get into that later, but what that does is it's prepaid taxes and insurance, and that can be a closing cost. It actually goes towards your property, it goes towards your insurance, but you're pre-funding the cost of those items. So at any rate, it's still cash out of pocket. They can't be financed. So you just want to understand that going into it. That way you can budget accordingly and understand early in the game. That way you're not surprised. The last thing you want is a surprise of $10,000 or $12,000. Now, besides the lender, there are out-of-pocket costs just associated with buying a home. The most common ones are the home inspection. Now, there's a general home inspection, and oftentimes the general home inspection can bring up additional needed inspections because maybe something came up that, let's say there was a plumbing issue that we couldn't identify for sure what the issue was, so they recommend, hey, we should probably get a plumber out here to take a look at this more closely and get an idea of what's going on. And that plumber could then cost you a little extra cash to have them come out and inspect and tell you what's wrong with the place. A typical, at least in San Diego, a typical home inspector is gonna probably run you between $300 and $500, maybe $600, depending on what size the property is. Another common out-of-pocket expense, which actually will be reflected on your closing costs, but it is something you have to pay for in advance, is your appraisal. So the appraisal is going to be probably between $450 and $550 out of pocket. So between the appraisal and the home inspection, you're looking at probably between $800 and $1,000 out of pocket on top of your kind of typical closing costs with the purchase. And those are things that you just can't get back. So even if you do, get through that process and say, hey, there's just too much wrong with this house, unfortunately, you're not going to be able to get that money back. But it's better to have, $800 or $1,000 lost on that transaction than it is to buy a lemon of a home that's going to cost you thousands upon thousands of dollars to fix. So building a strategic and realistic home search based on your budget, it's important to set the proper expectations. That's where the realistic part comes in. We obviously want to set your search based on your budget, but you also need to understand what the market's doing. That's why a good agent is going to be able to tell you if it's a buyer's market, seller's market, or if it's a balanced market. And from that, each property is going to be individually listed at a specific price typically based on comps in the neighborhood. But a good agent's going to be able to analyze the price and tell you if that price is too low, if it's too high, or if it's just right based on the current comps. Most homes are going to sell for 99% of what they're worth. Here's a key phrase that I want you to remember. List price does not equal value. Value of a home is based on what a buyer is willing to pay and a seller is willing to sell, right? So an asking price is just that, it's an asking price. Now that asking price might bring multiple buyers to the table, which then drives the price up due to demand. So it doesn't necessarily mean that that's the value of the home. It also could be that it's overpriced because the seller just wanted a specific dollar amount and it wasn't based on any reality.
You're not making any sense at all.
And nobody offers on it because all the comps in the neighborhood are 30% less and they're just sitting there with no realistic price point or justification as to why they're priced the way they are. But just know that 99% of all homes sell for what they're worth. Not the list price necessarily, but they sell for what they're worth. Most homes' value is really contingent on the condition that it's in. So if it's highly upgraded and it's gorgeous, beautiful, then that's gonna warrant a higher price tag. Now, the number one factor in value is what they always say, location, location, location. So if the home you're looking at is sitting at the top of the hill in the neighborhood and is overlooking everything with a fantastic view, and it's got the biggest lot and it's all usable, they got a pool, they got crazy upgrades, and oh my gosh, it's amazing, it's the best place.
Dear God, it's beautiful.
That home is going to be the one that sells for the most because it's just got more value. It's got a better location, it's got all the upgrades, amenities, etc. Now you're not going to get the same price, for a home that's down at the bottom of the hill that doesn't have those features. So you got to understand that the asking price is just that. It's an asking price. It's a starting point, and from there, it's your agent's job and your job to analyze the market and understand where the prices are at and compare it to that home and what they're asking for it and decide, is this the right price? Is it too high or is it too low? Because there's always a chance that you may need to go over the asking price in order to get it because they priced it low. Just don't get emotionally involved with the list price.
Don't get emotional.
I'm not emotional.
Focus on what the value is based on the market and based on how you feel about the property and based on the amenities and how it compares to the rest of the market. You're also going to want to take into consideration what the market is actually doing in terms of buyers versus sellers. So asking your agent if it's a buyer's market or seller's market is going to also help you understand what's the best way to set up your home search. For example, if everything that's coming on the market is getting multiple offers and going over the asking price, then you might want to set your budget on your home search a little bit lower than what you actually can qualify for. That way you have room to go over if you need to. On the flip side of that, you might want to search just a little bit over what you're qualified for and hopes that you can negotiate it down. And I wouldn't go too high, but maybe you can go, like I said, 1%, 2%, 3% over, just to be able to see if there's anything that's been sitting too long, and maybe you can get them down into your price range. That's only really going to work if it's a buyer's market, and there's always the X factor that the seller may not want to negotiate.
Wait a minute, I thought we were negotiating here.
Building a strategic off-market search. So this is a little unique. Not every agent or broker does this out there, but what I like to do is once my client and I have really figured out what areas that they want to be in, then I can start being really selective on a target audience of who I want to maybe send a personalized letter to. Maybe there's 50 homes in a specific neighborhood that they would like to be in, and it fits their budget. I never solicit an off-market homeowner unless we know that that property is likely to fit in their budget based on comps, and it's obviously in an area that they actually want to be in. And I never send a letter out that isn't 100% real.
Keeping it real.
But I get a lot of traction that way, and we can find a lot of off-market properties in neighborhoods that my clients want to be in because we're being proactive rather than just being reactive as to what's coming on the market. Reviewing and understanding the purchase contract before writing offers. Now, I find that most clients I work with, they get so caught up in the home search that when they do end up finding that one they love, the anxiety hits them like a tsunami when that first offer is written because the purchase contract is brand new, they've never seen it, or maybe they have seen it, but it's been 10 years since they last did a home purchase or a home sale. So then they're like, oh my gosh, there's 10 pages or 14 pages of legal language that I have to review, and it's not enjoyable.
What I see is that you are getting worked up, and what I would hate to see is for you to get overwhelmed like you did in 2008.
When you're already stressed about getting the house and now I got to try and read, contract language and figure it out, it's not fun. So I always like to give a copy of a purchase contract to my clients early. That way they can review it. I can highlight and annotate all the most important parts of the contract that are going to really pertain to money, out-of-pocket costs, key terms and timelines that they're going to need to understand. That way when they go into the offer, they're not surprised and they're like, oh my gosh, what does all this mean? So once we do go into the offer phase and they've had a thorough understanding of what the purchase contract involves and what the terms are and how we were writing it, it becomes just way less stressful. And I found that to be a real help in making a transaction much smoother and just much more enjoyable.
It always goes down smooth.
Now, I will say this, there's not a single thing I can do to alleviate all stress from a home transaction. It's a big purchase, and it's an emotional thing. So, you know, just know that there's gonna be some anxiety, but we'll hold your hand through it. A good agent's gonna hold your hand through it, and you know, they're gonna calm your fears and answer all your questions and make sure that you feel comfortable along the way. That concludes our video for today. I hope you got a lot of good information out of it. If you would, like and subscribe to this channel and hit that notification bell. That way you don't miss any videos that I post.
Write that down.
I'll be doing a lot more educational videos here, so come back anytime and check them out. And if you have any other questions, you can always reach me on my contact info below, and I will talk to you soon. Take care, guys.